Welcome to the 800 Credit Score Man Show. I am your host, Kevin King. He is I, and I am him, the 800 Credit Score Man himself. I want to thank you guys for coming in and listening to the 800 Credit Score Man Show on this Saturday. It's 1:30 Central Standard Time, 2:30 on the East Coast time. And again, thank you and welcome. If you're new to the show, sit back and listen so I can help you guys increase your credit scores, which saves you money in the end. And before we get started today, I want to do one thing before I ask you a question. The first thing I want to do is send out my prayers and condolences to all of those that are facing Hurricane Matthews. Hurricane Matthews has come through Haiti and is dealing on the East Coast with a lot of rain and things of that nature. I hope you guys all stay safe. Please stay safe out there, and our prayers go out to you guys that are being affected right now. So let's jump into the show, you guys. So I want to ask you this question: why don't you check your credit reports? Do you think it hurts your score for you to check your own credit report? Well, we're going to discuss that today. This show is entitled Myths, Lies, and Untruths. So let's discuss today the myths, the lies, and the untruth that has been going around about the credit scoring system. So let me dispel some of those things for you today. And really the topic for this question for today came up because I received a question from someone from that listened to the show last week. And if you missed the show last week, go back and listen to Credit Matters. That's the title of the show from last week. You can catch it right here on Spreaker.com. You can catch it on iTunes, and you can catch it on SoundCloud as well. But go back and listen to that show. In that show, I give you guys a hardcore example, dollars and cents, what it costs you if you have good credit versus having bad credit. Toward the end of the show, I talk about a car and how much it'll cost you to buy the same car as someone with good credit versus someone with bad credit. And so also I mentioned at the show about a home and people that want to buy a home that have good credit versus bad credit as well. And I wasn't able to get that into the show. So right here, right now, I'm going to throw that out here really quick, really quick, so we can get into the myths, the lies, and the untruth that are being told about the credit scoring system. So with the credit, if you have good credit, and that's relative, if you have good credit and you're going to buy a $200,000 home. Now, don't get caught up in the $200,000. Some of you are out there thinking, man, I can afford a $200,000 home. Some of you out there thinking a $200,000 home is a itty bitty home and it's not enough for you. But this is just an example. So your interest rate, if you have good credit, right now, when I talked to a mortgage lender, told me it's about 3.5%, and that's your interest rate. So with a 3.5% interest rate on a $200,000 home, financed over 30 years, your principal and interest payment is about $898 a month. Now, if you have bad credit, your interest rate isn't that much higher, really, relatively speaking. It's at about a 4.5% interest rate over 30 years, and your principal and interest payment is $1,013 a month. Now, don't go out there and go to your mortgage lender and say, hey, the 800 credit score man told me I can get a $200,000 home for $1,013 a month. That's not what I said. That's principal and that's interest. You also have to add your insurance in as well as what your property taxes are. So that's going to raise your monthly payment. But just for principal and interest, $898 for a person with good credit and $1,013 for a person that has, let's say, the bad credit. So the difference is $115 a month for the person with the bad credit versus good credit. Now, you may say $115 a month is not a lot of money. That's sure, I can do that, especially for a home. Now, let's look at that particular mindset. Some people are always short $200 when it comes to their rent or when it comes to their current mortgage. They're always short just that amount, $200. So $115 a month can make a big difference in itself. But it's not just a month. Let's look at over the duration of the particular loan. So that's $115 a month times 12 months for the whole year. So you pay $1,380. If you have bad credit, you have $1,380 more per year than a person that bought the same home with the same amount of money. You pay $1,380 a year more than they do. And you got to multiply that by 30 years because that's how long your term is for the mortgage. And so you pay $41,400 more for the same home that somebody else paid. Now, I don't know what you can do with your 4140, but 4140 can do a lot of things in your life. For $41,400 is a big difference when you have bad credit versus good credit. So this is why I say when you start thinking about I want to buy a home, when you start saving to buy a home, that's also the time that you start working on your credit. You do not wait until it's time to go and put in a mortgage application and then start working on your credit. Because if you have issues on your credit report, then the mortgage lender is going to make you complete those things or get rid of them or what have you. So you need to start working on them prior to that so you can get the better interest rate. Because once you walk in that door and they pull your credit report, you're basically stuck right there with that particular credit score number. So even though you clear some things up, it's not going to raise your credit report or your credit score right away. And so you're going to wind up paying that additional money any old way. So start then. And if you need help doing that, it seems like my niche. Lately, I've been getting a lot of clients that say they want to buy a home. They're 6 months out from buying a home. They're 1 year out from buying a home, but they need to raise their credit scores. So my clients are coming to me, with the 570, a 578 credit score. They need to get to that 640, 650, and they've got a year or so to do so. And those are the clients that I've been helping a lot lately. So if you need help doing that, contact me, 800 Credit Score Man at gmail.com. Again, that's 800 Credit Score Man at gmail.com so I can help you out. You can catch me on Facebook, 800 Credit Score Man on Facebook. I am the 800 Credit Score Man on Instagram. On Twitter, it's at Credit Score _Man on Twitter. So there we go. That's what I wanted to get to and tell you guys about last week's show. But go back and listen to Credit Matters. Credit Matters, so you can get the full experience when it comes to how much it's going to cost you when it comes to buying a car and other things as well. So let's move on today. Today we're talking about the myths, the lies, and the untruths when it comes to your credit scoring system. So the first myth that I really want to tackle is ethnicity. A lot of people think that your ethnicity has something to do with you having a bad credit score. You don't get any more points on your credit score because you happen to be white, or if you happen to be Indian, or if you happen to be Asian. You don't get any additional points for being those things. So ethnicity has absolutely nothing to do with what your credit score is. There's been a running joke for years about the African American community and just having bad credit. So everybody in the African American community does not have to have bad credit. So believe that. So that has absolutely nothing to do with your credit score. And another thing that people often talk about is where you live. So no, where you live has nothing to do at all with your credit score. You can live in a very good neighborhood, you can live in a bad neighborhood, but it has no effect at all on what your credit score can be. Now here's a caveat there. So if we take a look at back in the day when there was a lot of redlining going on in the African American community, maybe that affected your credit score eventually down the line. And then most recently with the mortgage crisis, unfortunately, the African American community was targeted, if you will, by mortgage lenders for bad loans, for subprime loans, for loans that you had to do an 80-20 split, or you had to have balloon payments, something of that nature. So when the market crashed, then unfortunately the African American community was affected more than others because of that, and our credit scores have gone down because we couldn't pay those loans when the balloon payments came through. And so how do you stop that? You stop that by having knowledge that you don't have to accept one of those kinds of mortgages at all. If you have a 720 score, that is a very good score, and you have the other requirements, about when it comes to how much money you make and all of those things, then you can get a regular FHA loan if you're a veteran, please, please go through the Veterans Association so you can get the best rates possible. But now you have the knowledge. You have the knowledge because you're listening to the 800 Credit Score Man show. And I'm telling you, at a 720, you are good. You can go into any bank at all, and you should be able to get a regular FHA loan, and you shouldn't have to deal with any kind of balloon payments or 80/20 or any of the other things that they come out with to try to get around that and to negatively affect us eventually in the end. Because if you can't pay, then it's going to negatively affect your credit score. So your ethnicity has absolutely nothing to do with what your credit score is. Where you live should have nothing to do with where your credit score is. So let's talk about income. And the reason actually this topic even came up is because of a email I received from someone over the week. I always tell you guys to email me with your questions, and I received an email. It's going to be on the question of the day today, and some of this was located within this person's email, this information, and I just wanted to make sure that everybody knew that those things do not affect your credit score at all. So let's talk about a third one, and that's your income. So your income has absolutely nothing to do with what your credit scores are. You can you can be a star. You can be a star. You can be a basketball player, a football player, or whatever, and you can have bad credit. Have you even paid attention to how many stars have had to file bankruptcy? So they just didn't have the money to pay it. And if you file bankruptcy, that's going to negatively affect your credit score, which means you're going to have a bad credit score. But you can also be a person that makes $15,000, $16,000, $20,000 a year, and you can have excellent credit. You can have perfect credit. So your income has nothing to do with it at all. And I want to give you an example about someone that actually played in the NBA. So back in the day when I was doing loans and at a finance company, person went into a furniture store, and of course we finance furniture. Person went to the furniture store and they wanted to, basically sounds like they wanted to furnish their whole house in this furniture store. So we get an application over. So again, this person was in the NBA, had been in the NBA a couple of years, and they wanted to go ahead and finance all this furniture. Pulled a credit report on this person, and kid you not, this person could not finance a pack of gum. This person hadn't paid anyone on time ever. They had collections and charge-offs and judgments and car repossessions, all of those things, and their credit score was just way too low to go ahead and give them credit. Now, as far as money is concerned, I mean, their salary, of course, they made a lot of money. They might have had enough money in their pocket to actually pay for the furniture there, but they were attempting to finance it, and I simply couldn't help them out because they couldn't finance a pack of gum. So that goes to show you, not everybody that makes a lot of money can go ahead and finance whatever they want because your income has absolutely nothing to do with what your credit score is. Currently, Donald Trump is running for president, and he's filed bankruptcy several times. I'm not sure what his credit score will be, but I can't imagine that it's actually that good. But he has additional ways to finance things, so of course he can still get things. He may just have to pay a little more for them than what the average person would because of he's filed bankruptcy before. So again, ethnicity, nothing to do with what your credit score is. Where you live, absolutely nothing to do with what your credit score could be. And your income has nothing to do with what your credit score could be. So we've dispelled those things. So at the beginning, I asked you a question. I asked, why don't you check your credit reports? And do you think that hurts your score for you to check your own credit report? And so let's talk about that one. Checking your own credit does not negatively affect your credit score. Not at all, not one iota. Now, here's what you can't do. You cannot go to the auto place or go to a tire place or go to a department store and have them run your credit to try to obtain credit from them. If you do that, that absolutely hurts your credit score. You're going to get dinged 2, maybe 3 points for those inquiries. So we've discussed those before. But when you check your own credit report and you're checking it just to kind of take a look at it, if you're looking at it on like a Credit Karma or a Quizzle or a credit sesame, something like that, that does not negatively affect